So we covered a pretty massive amount of information just now, and we barely scratched the surface of any of it. So most people at this point will probably be wondering, how am I supposed to use this information? At this point, I'm just going to lay down a loose philosophy of how one might incorporate crypto into your portfolio and how to think about this stuff as a whole. Of note, I'm not going to go into depth on the terminology outside the crypto space in this part. If you'd like more details on personal finance, please feel free to check out my previous Let's Learn on personal finance. I'm going to assume you understand these basics going forward. So, a lot of the fundamentals of investing in stocks, in my mind, apply to crypto investments. In fact, some of them apply even more. Don't invest money in crypto that you can't afford to lose. Don't invest money you think you'll need soon. Don't invest in an individual asset because you think it's going to the moon in the next week or two. Yeah, I know that ruins the fun, but you got to be responsible. But there's also some rules that are somewhat harder to apply. In the stock market, the safest long-term option is, as you know, index funds and ETFs. Most portfolio managers can't beat the S&P 500 over decades, and 99% of people shouldn't even try. The smart retail investor or non-institutional investor invests in broad, passively managed funds that automatically diversify their money and allow them to dollar cost average into the market without having to keep their finger on the pulse of the NYSE. In crypto, we're only just now getting crypto ETFs. Right now as I'm recording, we don't even have that yet. But the SEC is looking them over, and we think they're probably going to, approve some. And so far, they have no track record whatsoever. We don't know how crypto ETFs are going to perform in comparison to simply holding BTC, which itself has been the best performing asset of the last decade, including stock ETFs. So for the most part, people who are into crypto right now are investing in individual coins almost exclusively. You don't want to invest in individual stocks, but you pretty much have to invest in individual cryptos, pending those crypto ETFs becoming broadly available. Traditionally, stocks are considered the risky investments. This is in the context of stocks, bonds, cash, the assets most normal people hold. There's also real estate and commodities, but fewer people hold those. These days, crypto is the riskiest asset class to own, and you have to respect that. Not using money that you can't lose is even more important in crypto. It's for disposable cash only. If you're just starting out and you either don't feel like becoming well-versed in the crypto world, or you want to take your time and learn along the way, but you do want to get your feet wet, it's likely safest to start DCAing into BTC and ETH, the top two cryptos by market cap. BTC, as I've emphasized multiple times already, is the best performing and most proven asset in the space. ETH is the quintessential Generation 2 crypto with institutional adoption and network effects that dwarfs all other Gen 2s. How you split that is going to be titrated to your risk tolerance. In my mind, 90% BTC and 10% ETH is for someone in this situation who's on the lower end of risk tolerance, and 90% ETH and 10% BTC is for those on the higher end of risk tolerance. And you could really go anywhere in between those extremes, or even more extreme than that. I'll concede this does bring up the idea of whether volatility is equivalent to risk. In my opinion, it does not. And a lot of what I just said is not quite right with regard to, the use of the term risk. There's some nuance to what exactly we mean when we say risk or volatility, but we can talk about that another time. Now, if you're going to invest in altcoins, coins other than BTC that is, although I really don't think it makes sense to continue including ETH as an altcoin anymore, because I feel like that comes from a BTC maximalist perspective, you can't afford to not know what you're doing. You can't afford to be a passive investor. You can blindly DCA into an S&P 500 dividend ETF without knowing anything at all about the market, and I'd say that's fairly responsible. You can't really do that with random altcoins. You need to do your own research always. Research from multiple sources. Don't just trust the numbers your favorite content creator on YouTube gives you. Look at them yourself and decide if you agree. Read the white papers. If I sit here and tell you Cardano is the future, and it's going straight to the moon, which it is, you can't take my word for it. Lots of these people talking online are full of it. Lots of them are just saying things for the clicks and views. Look at factors like what I mentioned above: social engagement, institutional demand, market cap, and the implications for upside potential, use cases. Look at transaction volume and volume trends, correlation with BTC, number of exchanges it's listed on, etc. And remember, once you've done initial research, always keep up to date on the development team's roadmap and follow news on each coin you're invested in. The outlook for a given coin may look bright one day and become dismal another day as market circumstances change. This also has implications for how many different coins you might feel comfortable putting money in. You can't overextend yourself in the altcoin market, or you may be asking for losses. It's not too hard to follow just ETH and BTC. Following Mana, ETH, BTC, OVR, VET, ADA, Doge, and ICP is much harder. As you're following your coin's price action, don't let yourself forget your fundamental assessment. If the fundamentals are there, a dip is simply a discount, and the paper hands are losing money by selling. If the fundamentals are borderline to begin with, or have changed in some material way, like for instance, countries start banning miners of a coin or something, you may reassess your position, or not. Limiting your losses often means that you bought high and sold low. So if you do end up doing that, be sure beforehand. Conversely, don't FOMO into the top of a pump and dump. If you hear about some trending coin that's going parabolic and has experienced a bunch of its expected near-term gains, don't just throw all your money into it and try to ride the wave up. Do the research first. Invest at an appropriate price, which often means waiting for the parabola to even out and start going down, which, by the way, may mean potentially waiting months, maybe even years, before it starts shooting up again, if it does. Understand that these altcoins' short to mid-term price actions, at least for now, are pegged pretty heavily to the value of BTC. They all go down when BTC does. BTC has halvings, where mining rewards are halved and supply is constricted. And these occur roughly every 4 years, and its price tends to soar after these before encountering a so-called blow-off top, after which its value plummets, which gives us the wildly volatile 4-year cycles we've been seeing in crypto markets until now. Investing in altcoins intelligently requires a basic knowledge of how BTC works. The entire crypto market is currently dominated by BTC, to the point where one important indicator you'll hear people talk about is literally called percent BTC dominance, the percent of the total crypto market that lies in BTC alone. Even if you don't much care for or hold BTC, BTC is central to the cryptocurrency's trading model in 2021. So say that you've done your research, you know what you want to invest in, you've got some disposable cash, and you're ready to jump in. Where do you buy? What's your trading strategy? My answer is yes. There's a bunch of crypto exchanges you can buy from. BlockFi, Coinbase Pro, which is a deceptive name because it's free, eToro, Kraken, Robinhood if you're a scrub. Pick one. They each have their own ups and downs. I accidentally started on Robinhood and have more money on there than I intended because Ethereum Classic blew up, so I guess I'll keep some of my ETC there for now. I mainly use Coinbase these days. BlockFi allows you to get interest off of certain coins. eToro gives you certain automatic trading options. Pick one, or multiple. If you're really into a certain coin, you might just be going for an exchange that has that coin at the lowest price. You can use more than one exchange, possibly leveraging their disparate prices for what's called crypto arbitrage, where you buy coins on a cheaper exchange and sell them on an exchange that has a higher value to pocket the difference. You can get into mining proof-of-work coins. You can get really into yield farming, whatever. I personally approach crypto trading kind of how I approach stock trading. You want solid fundamentals and a long-term investing horizon. For crypto, you should also factor in public engagement. Buy low, sell high. Stay on top of the news cycle for any individual asset you buy. Nothing complicated. When the FUD reigns and the market dips, you buy more heavily into your strongest convictions. When things are going parabolic in the altcoin market and you reach your predetermined price target, you sell out of your position to realize gains instead of greedily holding out for the top of the mountain. People thought Bitcoin was done growing at 1,000. They were wrong. They thought 10,000 was a respectable end to its growth. They were wrong. But if you only looked at these prices in the short term, which sometimes meant multiple months, you might have thought they were right. Those who believed in the fundamentals held to their convictions and have multiplied their money the most. Now, if something fundamental were to change about Bitcoin moving forward, you'd want to know about that. Not that that's really happened much since its inception, but if it did, or more likely something like that happened to another coin like, say, Ethereum, you got to know the news as early as possible and potentially make adjustments. And of course, as I said in the previous video, if you're 70, maybe stick mostly to bonds. And if you're 20, maybe take a bit more risks with more stocks and crypto. But like I said, that's not financial advice, that's just me. And that brings us to the end of the video. If you liked the video, don't forget to comment, like, subscribe, share, as it really helps the channel. If you hated it, go ahead and give it a big thumbs down. As always, I'll see you in the next video. Stay learning, my friends.